I really do think the secret to success in investing is not seeing the future with some kind of mythical vision. It is seeing the present with clarity. Really, the whole trick is just to understand where we are rather than try to pretend you can predict where we're going. People are smart when it comes to understanding the economy. I think a lot of people in financial markets try to use a lot of jargon and loft the ball over people's heads, but really the basic issues in economics and finance are fairly simple. You just have to use a language that people understand, and if you can express something in a metaphor or an analogy which people can relate to, then they get the point.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Dr. David Kelly, who's Chief Global Strategist at JP Morgan Asset Management. He lives in the Massachusetts area. He's held that position for over 14 years. He was previously an economic advisor at Putnam Investments, and prior to that held a range of roles in the financial services industry. Originally from Dublin, like myself, he's a PhD in economics from Michigan State University. Welcome, David. Thanks for joining me today.
Very glad to be here.
Well, let's start with your background and career journey, and we can go right back to your UCD days or before that.
Well, yes. So I started out in Ireland like yourself. My father was a politician in Ireland, and he was a lawyer. And while he was a very good public speaker, I felt like at the time people really needed to understand something about economics to really be helpful in Irish politics. So not a very original idea. I wanted to go into politics in Ireland, so I thought I had to learn some economics first. So I did economics in UCD, and then I decided, okay, now I know all the questions, so I better do a PhD to get some answers. And I came over to America to do a PhD. And over time, I sort of decided, well, this is really the place for me. And I met a girl from Grand Rapids, Michigan, and we got married, and I just decided to stay here. So that's really how I ended up being an Irish economist in America.
If you just could take us back, so this would have been, the 80s? Any particular subject that was on your minds then in terms of the PhD?
Well, yes. I mean, I've always been interested in macroeconomics and, frankly, policy. And I remember back at the time, I remember in the late 1970s, there was a general election in Ireland, and Party won on a platform of just big tax cuts, lots of spending to stimulate the economy. And as someone who was interested in economics, the idea of, well, wait, you're going to spend all this money, but Ireland's just a big old importer. So all it's going to do is the money's going to help the Germans grow their economy or the French grow their economy, and Ireland's just going to end up with a big old trade deficit. It was really from a policy perspective. I felt that economics was not really understood by the public, and I was really interested in what could you do from a macroeconomic perspective to make better decisions to essentially improve people's lives.
And you and I are probably of the generation that remembers the 70s in Ireland and the lines for the petrol pump. So you probably have a little bit of a sense of the 70s we've been harking back to in recent times.
That's right. But I think there are similarities, obviously, with high inflation today, but there are a lot of differences. The differences in Ireland, of course, has completely changed, but also in the United States. Back in the 1970s, there were powerful trade unions. We had these big increases in energy prices. And then trade unions would want to make sure they got compensated for those. And so you'd see big wage increases and strikes to get those wage increases. And I think a lot of people assume that the only playbook we have for the inflation that we have right now is back in the 1970s. And people seem to assume that things are going to play out the same way. But I don't think they will. I think this is a very different economy in many ways from the economy of essentially 50 years ago. And I do think that inflation is going to be less sticky in the United States going forward than it was back then.
Really interesting. Well, we'll turn to some of those topics a little bit later. But just take us back. So you did your PhD in economics. Did you originally think you would become an academic, or what led you to want to practice?
No, I never really thought I'd be an academic. To be honest, academic economics I found to be a little sterile. People were always looking for the best mathematical model or ways to show their statistical wizardry. But they really weren't addressing real-world questions. And I felt that there was a real lack of research on the basic bread and butter issues in economics at an academic level. I also wanted to make some money. So the idea of working in finance and working on Wall Street appealed to me pretty quickly. And so I did some economic consulting. I worked for various financial firms, but I just find that if you're going to do economics, you have to have a way of making a living doing that. And the easiest way to do that is to work on economics as it impacts financial markets.
Exactly. And you also need to have a way of staying relevant. And I think the way you stay relevant is by being immersed in practice and I think in the day to day. So that's very interesting. Let's move now to, we talked a little bit about today's environment. What's at the forefront of your mind today as you work with clients to navigate the market environment? I know it's a broad question, but I'd love to know what keeps you up at night and what excites you.
Well, there are different issues. I mean, the first one is I do take the responsibility of advising clients very seriously. And usually the advice is to recognize that this is not that difficult, but also don't just get pulled into whatever fad is exciting people at the moment. The idea of investing principles are recognize you've got a long time horizon. You're going to be around for many, many business cycles. Don't try to make all your money in one fell swoop. I think for most people, they make their money doing what they do best, whatever business that is. And what financial markets can do is they can amplify that. They can add to their savings, make those savings grow. But ultimately, they should focus their energies on how do you make money and then be relatively conservative when it comes to investing. So what I worry about for individual investors is they get caught up in the latest fad, things like real estate back in the first decade of this century or things like cryptocurrencies today. And then broadly speaking, in the big picture, I don't really worry about economics that much. Economies are very good at adapting, or free enterprise economies are. They tend to adapt and change over time and do pretty well. I do worry about the politics side of it, though. Geopolitics is very unfriendly at the moment, and I feel that democracy is a little bit on the retreat in various parts of the world, and that does concern me because ultimately I think politics has the potential to undermine economic progress.
It's really interesting given your own background, I suppose, family background in politics. And I have the same. My mother was also an Irish politician. We're going to talk later about ESG. And clearly there is a very long arm of politics right into ESG issues around climate change as well. We can definitely talk about that. I want to get back to your point about making things simple, because that I think is one of your really distinct hallmarks, that you do distill very complex economic concepts into simple, easy to understand, relatable concepts. When did you start doing that, and how do you do that?
Well, I've always done that. I guess it's something of perhaps a latent gift of mine, which I never really realized. But I try to be sort of a lateral thinker. So I do the math and the research, and I love running. So when I go out running, I'm just passively at the back of my brain, it's working out, well, this is like that. And so, the unemployment rate looks a bit like a playground slide. It goes up sharply and comes down slowly or whatever. But you just come up with analogies, I think, sort of passively. And it really comes from all the other things you do in life that give you the ability to relate the mathematics and the equations of what's going on in the economy to what people actually see in their lives. And as soon as you do that, I think people are smart when it comes to understanding the economy. I think a lot of people in financial markets try to use a lot of jargon and loft the ball over people's heads, but really the basic issues in economics and finance are fairly simple. You just have to use a language that people understand. And if you can express something in a metaphor or an analogy which people can relate to, then they get the point. And so that's really what I always try to do, but it's very much a passive process. You do the research first, and as you're doing the research, some analogy or metaphor or idea for how to explain something comes to you.
And I do remember we had another recording we did together. You spoke, I think, about an accordion, something contracting and expanding, as well as an economy being a living, breathing kind of entity. Is there any of those analogies that have been particularly durable that you found that really got a great response?
Yeah, I think they do. But I must say I'm often amazed when people remember a story 10, 15 years later and they say it to me and I can't remember telling that story at all. And then I can remember the story, but I can't remember what it was, what the concept was. So, I think it is sort of an in the moment kind of thing. And I suppose if I thought about it for a while, I could find some analogies which I've been using year after year after year. But the economy does evolve and change, and the issues that we're dealing with evolve and change. And as you said earlier, I think it's very important to be relevant. So I try to manufacture new analogies and new ways of talking about things and looking at things as the economy itself evolves.
I think a recent one is line in the sand around inflation and the Fed drawing that. And that's something that I saw some of the press latched onto. Well, let's go from simplicity back to jargon a little bit, because we hear a lot today about regime change and whether we're in the middle of regime change. I'd love to know what you think of that and whether that's maybe a misused term.
Yeah, I think it is a misused term. I think regime change is usually what people do when they've got one econometric model which won't neatly move over to another econometric model. And so they say, well, everything's just changed here. I mean, the economy evolves over time. And there are, apart from the sort of long-term evolution of the economy, there is an overlay of a business cycle on that. And that's really how I think of the economy evolving and then getting battered by geopolitical forces and environmental forces and other things which cause cycles around the economy and obviously policy decisions. But I'm not a huge believer in regime change, saying that you move from one distinct way that the world works to another. It's usually an evolution. And I think, for example, right now, a lot of people think we've moved from a low inflation environment to a higher inflation environment. And I'm not quite buying that. I think this is really much more of a cyclical response to a pandemic-induced shortage of supply, but also a pandemic-induced surge in stimulus. I don't think that really is going to last for that long. And I don't think the underlying inflation regime has changed.
Very interesting. And the other kind of, I suppose, regime perhaps that seems to be on the topic of everyone's minds is the dominance of the US economy in terms of leading the recent, whether it's a bear market rally or beginning of a bull market rally we've seen in equities, also with a very strong dollar. You've always had a very global perspective. So given what we're seeing today in the US and the lagging behavior of non-US markets, what's your conviction and the appropriateness of maintaining a global investment approach, particularly for US-based investors?
Well, it certainly is frustrating for people who think about this in terms of valuations, because we have seen the US dollar move up and up and up. It's at too high a level. It's hurting the US economy, but also it hurts the returns in international investments. And we have seen problems overseas, but I still look at markets around the world, and frankly, equity markets in places like Europe are a lot cheaper than they are here in the United States, even allowing for some problems. We face problems, they face problems. So I think it is very appropriate to have that diversified portfolio and have some international investments. For example, the dividend yield on international equities is about twice what it is here in the United States. So even if international equities don't go anywhere in particular, you can get a decent income out of international equities. So I think people should be diversified and should have international in a portfolio. I think we've gone through a long period of events which have helped US assets and the dollar move higher, but that isn't guaranteed to continue. And I think it's better to have your money spread out and have plenty of international diversification.
And another real area, because I also have this international perspective where I think there's divergence in terms of perhaps the resonance of certain themes, is around ESG factors and sustainability. Quite a bit of difference maybe around the universality of the acceptance of that in Europe or Australia, for example, versus, say, the US. How do you see this increased emphasis on ESG factors and sustainability as changing the dynamics of markets and the investment landscape?
Well, it certainly does have a different impact across countries. I think in Europe, there is a lot of focus on it at an individual level. In the United States, which is frankly seeing just as much climate change as Europe is, there's much less focus. I think there are sort of two issues here. One is that I think there are more genuine environmentalists in Europe, and I think because perhaps of the political structures there, the Green parties can do better in Europe. It's possible to get seats in parliament and have an influence on policy. But I think also in the United States, it's very political. And part of this is that there's sort of a creed which a certain part of the population has to abide by, or at least agree to, in terms of the things that you believe in. And there are people who feel that they're more nationalistic, they like free markets and libertarianism, and they don't want scientists telling them what to do. And that's quite different from Europe. But at another level, there is always a point here, which is that when it comes to climate change, we are talking about the global emission of carbon into the environment. And what a lot of Americans would probably say is, well, it doesn't matter a whit what we do here in Ohio in terms of global emissions. If the Chinese keep on emitting carbon into the environment, or the Indians do. So unless you have a global solution, individual effort doesn't really contribute that much. And I think one of the sort of cultural differences between Europe and the United States is the United States is very individualistic in outlook, whereas Europe is much more of a community. And so I think it's kind of natural that Europeans would be a little bit more ESG focused than the United States. But I don't think that's just a slam on the United States. I think there is a genuine question about how effective the green behavior of any individual country can be in the absence of a global effort and a global solution.
And another topic of ESG, of course, is diversity. And, you've been in the financial services industry for many decades. This podcast has at its origin a focus on elevating minority voices and diverse voices in the financial community. What score would you say the industry has now in terms of its level of diversity and inclusion from your perspective?
Well, I know in my own team, I lead a team of 30 strategists and analysts around the world. Almost half of these strategists and analysts are women, and we have what in the US would be regarded as minorities, but we have an amazing number of languages and backgrounds. The only thing they all have in common is they're all pretty much younger than me, but we do have a very diverse group. But I think for the industry overall, I do think the industry really wants to be more diverse. I think I see nothing but open arms in terms of management when it comes to that. The one thing that I think the industry doesn't do very well is push back on the impression that a lot of people have that Wall Street is somehow cold and greedy and money grabbing. And I think that it doesn't attract enough diverse people into the industry. And I think that that is a shame. Whenever we see candidates who will improve the diversity of our overall team, we're very eager to interview them to try to make our organization more diverse and more inclusive. But I think that the overall impression that the financial industry gives the world is not really a correct impression. I see a lot of great people, just genuinely really nice people working in this industry. And I think sometimes the impression people get is it's all like the Wolf of Wall Street, and this is a very nasty bunch of people, and it really isn't. So I think we need to do a better job in selling the sort of social side of Wall Street.
It's a really interesting point, and it is tied to diversity because so much of diversity is based on access, whether it's perceived access or getting the pipeline filled. The point we discussed earlier about making concepts relatable is actually really the way to open the door to access, because it makes ordinary punters, say, want to read about economic concepts, feel that they can identify with them, feel that they understand them and can relate. And I think the more we break down some of these barriers in the jargon, the more access we'll get. I noticed that you're particularly popular in the segment that I now work with, which is the high net worth investor, the private wealth area, and the retail investor. Have you found that your following comes from a certain segment, or do you find that it's universally a message that's heard?
Well, I think it's pretty universal. What I've found over the years is that you can talk to investors of different level of financial sophistication, but you really don't need to change the message that much. You just have to be a little careful not to use too much jargon when you're talking to retail investors, but the concepts are just the same. And in fact, very often I find that institutional investors will really appreciate people putting things simply, because sometimes I've often been in meetings where people use huge numbers of acronyms and technical phrases for really quite simple concepts, and everybody nods because they're all supposed to nod. But the truth is, they're all lost and they're not drinking it in because you're just being too complicated in the way you explain it. As I said, I think the most important concepts aren't that difficult. It's just incumbent upon somebody who's speaking. If I'm going to take up your time by me speaking and you listening, it's a duty to me to make sure that I say things as clearly and as simply and as truthfully as possible. And I just feel like we don't put enough effort into that sometimes. Sometimes it's about trying to prove how smart you, the speaker, are, rather than try to get the point across. And I think a dedication to getting your point across really is where this starts.
Well, it's very clear from your delivery that you derive a lot of enjoyment from financial markets and have a real passion for following them. Throughout the course of your career, would you say there have been any highs or lows that you can share?
Well, there have been lots of highs. First of all, I love running a big team of young analysts and strategists. And over the years, lots of people, I've been their boss. And whether they were still working for me or working somewhere else, it always makes me feel glad to see how successful they have become over the years and watching them build their lives and their careers and feeling like I could help with that. So that's part of it. To be honest, I do love making speeches. It really is kind of fun. You hop up in front of a few hundred people. They're listening to you. You can be in the moment and say just exactly what you think. It is kind of a rush and it's fun and you feel like you're very alive doing it. The lows are pretty easy. The lows are when you're stuck at a blasted airport and your plane just got delayed another 4 hours, and traveling to and from the various places you have to travel to and from in order to do your job. That was a little easier during the pandemic, but most of my lows have been in airports.
But that's exactly where podcasts like this one come in, is using that time to listen to them. So that's the only way I've been able to offset some of that misery. So now getting back, you touched on travel. You've talked a little bit about running already. You often refer to these interests in your memos as personal interests that you find concepts therein that relate to economic concepts. Can you talk a little bit about those interests, particularly running? Do you do marathons? And what are your other key interests outside work?
Yeah, I've always loved running. I remember when I was a teenager, I was at a small school in Dublin, and a New Zealand rugby coach arrived, and he took one look at us and said that before we play any rugby at all, you're all going to have to get fit. And he sent me out running. And while I found that I was too small to be a good rugby player, I really loved running. I mean, it's just, for me, it's just zen. I don't listen to music or anything. It's just me and my running shoes and the road. And whenever I travel all over the world, I pack my running shoes and you just see the world and drink it in passively. So I've always loved running. I did take up running marathons a few years ago. And so I've run 6 marathons. I run the Boston Marathon every year for Dana-Farber, which is a wonderful charity, and I really feel very privileged to be part of their team. And so I'll be doing that again in April for as long as I can. So I love running. For a bit of a geezer here, I'm reasonably good at running at this stage. As I get older, if I can keep going, I'm slowly getting better. I play the piano very badly. I've always played the piano very badly, but I love doing it. And I think it's sweet music. Nobody else does. And then I play pool pretty well. So that's something else I do from time to time. Those are the things that I do. I do work a lot from home, which allows me to fit in a lot of interests and just to live my life the way I want to live it. And I've always had the freedom to really work when I want to work, which is often very early in the morning or over weekends, but then also not work when I don't want to work. And that's something I feel very privileged to have been able to do over the years, rather than work a strictly 8 to 5 or 9 to 5 job. So that's been kind of fun.
No, I definitely am a kindred spirit on the running side. I would share exactly with you that Zen moment. And when people often talk about ideas coming to them in the shower, I often think running is like an extended shower period, because if you have especially nothing else to think about, it's when a lot of ideas can be chewed over. We've spoken about your long career. And would you say, despite the lack of perhaps many lows, were there any setbacks or challenges or mistakes in there that you learned lessons from?
Oh, yeah, plenty of mistakes. I think one problem is always that while most economic models are not good at predicting recessions, so I think when it came to the 2008 financial crisis, I could see the housing bubble and see the housing bubble was going to blow up. I didn't fully appreciate the extent to which the derivatives attached to the housing market were capable of blowing up the whole global financial system. And so, it was obviously one error. So there are plenty of mistakes, but you learn from your mistakes. And one of the nice things about econometric modeling is it's always a mistake. You always get the number wrong. And you're trying to figure out, well, why was the number wrong this month? And what can I do to make it better next month? And then for personal lows, twice I've sort of had to change job involuntarily. I've never actually gone a day unemployed. So I feel happy about that, knock on wood. But there were 2 instances when basically my job kind of evaporated underneath me. And that's a very jarring, scary thing for people. A lot of people identify with their job. The thing you learn is when you have these incidents in life, and everybody says it to you at the time, you don't believe it, but usually it's for the best. And it turned out just that way both times. If you're forced to make a change, it's probably because something really isn't working, and you do need to look around and take your head up out of the sand and think about, well, what are you doing and what could you do? So I have found my greatest challenges have also been my greatest opportunities. And I think that's actually true for a lot of people when they reach my stage in life. They think back and realize I was really scared then, but actually that really was a great opportunity.
And you mentioned enjoying leading a team, and I'm sure being a mentor to many of them. Were there any key people in your life, any key mentors who influenced you, or maybe somebody not in the professional setting who's had an impact on how your career has evolved?
Sure. Well, of course, I had wonderful parents who really believed in me. And I had some teachers along the way who helped me when I was younger and struggling. But I think the common thing of people who have helped me over the years is I didn't necessarily need their advice. I needed them to believe in me. And that's really, I've sort of taken that to heart when it comes to leading other people. I believe that all these young people working for me can hop up on a stage in front of 1,000 people and knock the ball out of the park. They can be amazing on television. They've got all this capability. And I think when people recognize that people believe in them, they can do the very best. People don't do what you tell them to do. They don't even do what you do. They do what you expect them to do. So I've always felt that the great mentors of my life have been not people who gave me great advice, but people who just truly believed that I could achieve whatever I wanted to achieve. So that certainly has helped me over the years. And I try to remember that when I talk to people at an earlier stage in life.
And tied to that, I think it's interesting that you mentioned maybe advice, because what I would say is that there's, I think, increasing recognition, especially when it comes to the complexities of markets, that maybe we don't necessarily know the answer. And other commentators like yourself, like Howard Marks, has commented that we really don't know what's on the horizon for inflation or rates or the pace of the economy. And I suppose it's recognizing that we're all somewhat in the same boat when it comes to not being able to predict the future. I think it's interesting that simply listening and believing in people is perhaps the better course than the advice. But that said, I'm sure you may have received some advice or had any creed or motto yourself. Was there anything that stuck with you that you can share?
Well, I think the first thing, a few different things. First of all, I do think with regard to forecasting, I really do think the secret to success in investing is not seeing the future with some kind of mythical vision. It is seeing the present with clarity. Really, the whole trick is just to understand where we are rather than try to pretend you can predict where we're going. And I think that there's a lot of value in that. But other pieces of advice, many years ago, actually, when I was working for Lehman Brothers, and I should stress this was before Lehman Brothers blew up the world. I wasn't working for them then. But I remember a researcher coming in and just making a point about whatever your area of expertise is, nurture that. Don't go get away from that. Make sure that you keep working on it. So I don't ever sort of delegate. I do help people, give them projects to do, but I always want to run my own macroeconomic model of the US economy. I always want to mess around with the data and try to figure out answers. I don't ever want to back away from research and just give the answer. So I think one thing is just keep on researching. And the other thing is just find balance in your life. Life is short. So I think you have to make sure that you've got the rest of your life working well also, if you're going to be good at your job. The last thing I'd say, and it's, I've heard this advice, but I also give this advice to people also, is recognize it's not all about you. I've occasionally had people work for me who think that upper management sits awake at night worrying about what they could do for this person. And they don't. I mean, it's, just do what's right for your team. Do what's right for the company. Try to be a good person. And the more you try to help the people around you, the people that work for you, the more you help them elevate themselves, the better it's actually going to end up being for you also. So try to work on helping others and helping the team. And you'll end up, as Adam Smith would be, by almost an invisible hand, helping yourself.
Well, thank you so much, David. I think that's a lovely place to bring our conversation to a close. It's been an absolute pleasure speaking with you. You've been one of my favorite strategists to follow. And I think you managed to be both a breath of fresh air in the industry, as well as a source of searing insight. And your humility that you've shown here is just so refreshing. So thank you for coming here and sharing your insights with us.
No, you're very welcome, Ethan. I really appreciate the opportunity.
I'm Ethan Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors on their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.